But let's talk about the consumption patterns now, because TTK Prestige is the stock on our radar. The company reported a weak Q1 performance. The margins continue to be under pressure on the back of discounting, and in its conference call indicated that the demand environment remains challenging and they only expect a turnaround in the second half of the year. To discuss the demand outlook a little more in detail, TT Jagannathan, chairman at TTK Prestige, joins us now. Mr. Jagannathan, good morning. Always great speaking with you on the channel.
Good morning.
And hope you've been well and in good health. Sir, of course, in the conference call, you did mention that the demand trends are not looking great, but just wanted to understand in a bit greater detail, what do you mean by that? Where are you seeing the weakness emerge? And how long do you think this stretch could continue?
Actually, you have to look at this vis-a-vis last year. Last year, we had a fantastic year. First quarter, we grew 44% because we were just coming out of COVID and everybody spent money on the kitchen. This year, everybody's spending money on leisure. Every restaurant is full, every hotel is full, every flight is full. So the share of wallet for kitchen has come down. It's not something that's permanent or something that's worrying. It happened because last year first quarter was very good. The comparison is not very good. Even second quarter, but from the third quarter will look very good.
Hi, Mr. Jagannathan. Good morning, sir. In the last couple of years, the quarter two has been the largest quarter. You have done more than 800 crores in the quarter. How far off will it be? How much lower will this, quarter two be in comparison to the previous ones? Will it be anywhere close to that 800 crores or will it be much lower?
No, we're looking at 5% drop on that.
5%. So around 750 crores or that is doable for...
Yes.
Okay. And what about how are demand trends? Are you seeing some bit of a pickup? Inflationary pressures were there. Demand
Festival buying has started and it's very encouraging. Very encouraging. But it reflects only in the next quarter.
So, in a proper way, things will start to look up and up only third quarter onwards, sir. Is that what you're saying?
Yes, Prashant.
Okay. And is there and you said it's just a very large base effect. I mean, in terms of actually what you're seeing, the pulse and feel of it, it's okay. I mean, things will come back. It is a normal kind of environment. There is no underlying pressure.
If you look at the line of CAGR for the last 5 years, we have grown year after year. The blip last year was because we did extremely well.
Okay. Yeah. So that base effect is there. We understand that. Mr. Jagannathan, I want to understand what's happening on the operational front, because earlier you had guided for, I think, 15 to 17% EBITDA margin for the full year. Do you maintain it?
Yes.
Okay. You're maintaining that guidance. So the reason I ask is because discounting has also gone up, and I'm sure with the spends reducing, consumption patterns dropping, and there is of course a lot of competition, perhaps there could be some near-term pressure on margins as well, you reckon?
No, we do not discount. We only discount as to our plan. We don't disrupt the market at all.
Okay, all right. Mr. Jagannathan, it's good to know that margins will be in those mid-teens, 15 to 17%, but you're also guided for double-digit revenue growth. Is that still on the cards, going by the trends that you have seen?
For the second half, yes.
So for the year on the whole, what will it be? Flattish? First quarter was a degrowth of 8%.
Yeah, I would expect flattish.
So revenues will be in that vicinity of around 2,800 crores odd for the year.
Around that, yes.
Okay, got it. You give us some more clarity then. You're working on a premium brand. So I just want to understand more about that. Will you be launching it in-house or will you be acquiring it?
Launching it in-house.
By when?
I can't give you that number. I can't give you that date.
This is Judge, right?
No, Judge is the master.
The master.
Judge is not the premium. That's the lower end.
That's the master.
That's been launched.
So tell us about Judge then. That has grown very well. So what is the growth trajectory from here on?
Well, we're looking at fighting the cheaper brands. And like you said, it's doing well now. We'll have to wait and see how it plays out.
So, last few times we've spoken, you've been telling us that exports have been doing phenomenally well. That you've been having difficulty keeping up actually, and you've been diverting production towards exports. What's the situation now?
Europe has slowed down fairly dramatically in terms of their market, so they're stocked up. So there's a temporary blip again, but my customers told me that it'll all get set right by December.
Okay. Okay.
So that would mean, I mean, earlier I think exports was 5% of your overall business. You were targeting to take it to 10%. Is that on
Yes.
track?
We'll get not 10, but we'll get it somewhere between 5 and 10
By when?
by the end of the year.
By the end of the year, okay, somewhere between 5 and 10%. So you're saying that Europe is under pressure. I mean, of course, for all industries, you know, export markets have been quite tough this time.
Yeah.
Any other markets where you are present, where you're still seeing some pockets of pressure?
90% of our exports are Europe and America. We do exports up to the Middle East, but bulk of the exports are to Europe and America.
And how is America doing, sir?
Also slow.
Slower compared to the previous two
Yeah, but
quarters.
they
And
all
that's again
believe,
because
my customers believe it will pick up.
by December, you said, right?
Yeah.
All right. Mr. Jagannathan, what is the average price of a cooker?
I have no clue.
No, because you have a new capacity at Uttarakhand, right? That's coming up, I think, with
Yes.
1,100 cookers per day. So
Yes.
I was trying to calculate the revenue potential from that. So, I mean, if you could give us that number.
Those are in fact stainless steel cookers, so they're a little more expensive.
Okay.
I mean, I'm still lost, sir. You know, so if you could give me a rough range in terms of pricing, because we want to get to the revenue potential out there.
I'm guessing about 2,000 rupees.
2,000 rupees. All right. So just if I put in the math, this will be an incremental 70 to 80 crores approximately at optimum levels.
Yes.
Got it.
Okay, just one, niggling worry. Of course, I thought Nigel was asking about the price of cookers because he's out there to go and buy something for his own kitchen.
You know, even when I put that question, I was wondering, I was like, oh, it's not sounding too right. But anyway, we got the number that we're looking at from a financial perspective. 2,000 rupees stainless steel cooker, and you get to around 80 crores also.
Okay. Sir, I have to ask you about the overarching theme, which is a slowdown in consumption. I'll come to that in a bit. But before that, just one niggling worry on this promoter pledge of 3.6% that was created. Why is that? And any change in the promoter holding at all?
No, in fact, we've paid up that pledge. We've now taken it back.
Okay.
It was a temporary requirement which we took, and now it's gone.
So the promoter holding will continue to stay at 70%, is it?
Absolutely, 70.48%.
70. Okay, got that. Just one final question from my end. You started by saying that consumption patterns are slowing, and that's also because of people are now moving out of the kitchen and sort of traveling, consuming outside. Do you think it could be a longer stretch of a slowdown? I mean, are you penciling that in as well in your forecast?
I would not like to use the word slowdown. We're comparing it to last year. Last year, we grew 40%. If you want to compare it to that, I don't think it is fair. I don't think you can call it. There is a share of wallet that has moved from the kitchen to leisure. People are not going to be traveling all the time. It will come back.
Well, they'll want home food, right? But beautifully put, sir. Thank you very much for your time. Great to have you with us here, and thanks for joining us with that perspective. It's always good speaking with you. Okay.